What is good, YouTube? It's your boy Jello. Welcome back to my channel. In today's video, I'm going to be going over confirmation entries from the higher time frame into the lower time frame. So a lot of people ask me, how do you enter? What are your confluences for entries? What time frames do you use? I'm going to show you guys a quick little guide on how you can enter the market. So in this video, I'm going to be covering sweeps and also structure. So to start it off, what we see right here is a low and a high, right? Now beforehand, what we had were these lows sitting right here and also a break of these highs. So first, what we will do, we will mark up our liquidity. This low got swept, or if you guys want to say it broke this low, a lot of you are going to be trying to enter in from the supply sitting right here, and it's invalid because right when we broke past this low, we immediately reversed back to the upside, breaking the highs. Now within the market, you want to be going with the bias. You want to be moving with what the market's actually showing you. So if the market is bullish, if you're seeing signs of bullish pressure, why are you trying to sell? So we fake out all these early buyers right here. We sweep this low, we break up, also faking out these sellers right here. So what we have is a sweep of the early buyers, a break of the early sellers. And now what we want to do is we want to enter in off the low that broke the previous highs. So now what we have is we have our sense of direction for our trade. And now if you guys want to see what's the premium discount level of this area, you just pull the fib from the low all the way to the high. And as you can see, this demand is sitting in our 0.79, 0.886 golden levels. So if you're trying to trade off supply sitting up here, it's invalid because we have yet to mitigate this premium level sitting below. So now what we're going to do, we're going to wait for price to come all the way back down into this zone. And what you're going to see is all internal structure. You guys cannot be getting caught within this area because you're going to lose and lose and lose again. So here we go. Like I said again, a lot of you are going to be trying to get into this demand right here, but still invalid because we have orders all built up to the left. This is all classified as liquidity. So now let's play this out, see what happens. Boom. You get your fake out. People enter in this demand. They think it's a sweep, it's a break of the previous high. Okay, I'm going to enter in. It comes close to TP and then immediately reverses back down, stopping you out. Why? Because we've still yet to mitigate this general external low sitting to the left. So once we get the tap of this demand right here, we're going to look for a lower time frame entry. Now, what I usually look for is a 5 minute. I go from 15 to 5 or 15 to 1. This is just showing you the external structure on the hourly leading into the 5 or 15 minute. Now, if we go to the 15, we can see a little sense of direction and structure. But if we go to the 5 minute, what we can see is our true structure form. So if we mark up, we can see we broke this high and also this high sitting right here. Now, what we can target is this gap sitting above or even that liquidity point or that wick sitting above that. And the liquidity point would be right here. So what we'll do is we'll mark this up as liquidity and we'll also mark this box up as IPA. IPA is just imbalanced, inefficient price action. When you see a big gap within the market tends to push back into that area to fill it because it's inefficient. So with that being said, what we can see is we have inefficiency sitting right on top of our newly formed demand. So if we mark this out right here, we'll mark up the high to the low with the full imbalance leading within it. So all you want to do is you want to put your entry at the beginning of the order block or demand, whatever you want to call it. You can target the imbalance or you can target the liquidity point sitting above. So let's play this out, see what happens. We don't fully fulfill that imbalance yet. We build up liquidity, we tap in, and we run the highs. As you guys can see, you go from the hourly, you go down to the 5 minute, you look for liquidity points, you go with the bias of the market, what the market's actually showing you, and then from there you build your confluences within that trade. Obviously, we don't want to enter blindly into a trade. We want to make sure we have reasonings into actually taking a position. And that's going to wrap up the video. If you guys need more help in your trading, make sure to click the link in the description below and book a call with me. If you guys enjoyed this video, make sure to click the subscribe button and also visit my Instagram for more content.